Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week, the focus is on CBN holds at 26.5%, while caution won over rate cuts. Last week, we anticipated that the Monetary Policy Committee would retain interest rates, and that was exactly the decision. At its July meeting, the CBN kept the monetary policy rate at 26.5%, retained the cash reserve requirement at 45% for deposit money banks, and left the other policy parameters unchanged. The key issue, however, is not simply what the CBN did, but why it chose to wait. Inflation eased, but food prices sent a warning. Headline inflation fell slightly to 15.91% in June, down from 15.93% in May, ending 3 consecutive months of increases. Core inflation also eased significantly to 15.92% from 16.82%, largely supported by exchange rate stability. However, food inflation moved in the opposite direction, rising from 17.52% from 16.96%. Since food prices directly affect daily household spendings, this increase means the pressure felt by many Nigerians remains significant. There are, however, reasons to expect some moderation in food price pressures during the second half of the year. As the main harvest season approaches, increased supply in grains, vegetables, and other staples could slow the pace of food price increases. It is also increasingly likely that some food prices have already peaked. However, the extent of the relief would depend on security conditions, transportation costs, weather conditions, and how efficiently farm produce reaches consumers. The CBN's message is clear. 1 month of marginal improvement is not enough evidence that inflation has been brought under control. Global conflict complicated the decision. Renewed hostilities in the Middle East were a major consideration. A prolonged conflict could raise crude oil and other commodity prices, disrupt global supply chains, and increase transportation and production costs. Although Nigeria could earn more from higher oil prices, these benefits may be weakened if rising energy and imported input costs feed into domestic inflation. Cutting rates now could therefore expose the economy to renewed price and exchange rate pressure. A resilient economy gave the CBN room to wait. Nigeria's economy grew by 3.89% in the first quarter of 2026, driven mainly by the non-oil sector. The Purchasing Managers Index also improved to 50.1 points in June, signaling a return to expansion. External reserves rose to $52.52 billion, equivalent to about 11 months of import cover. These indicators suggest that the economy remains resilient despite high interest rates. The CBN therefore does not yet face an urgent need to cut rates to stimulate economic activity. Interest rates cannot solve every problem. The MPC also stressed stronger coordination between fiscal and monetary authorities, improved crude oil production, opportunities in solid mineral, and progress with banking sector recapitalization. This is important because monetary policy cannot directly resolve food shortages, insecurity, poor logistics, or weak energy infrastructure. Lasting disinflation will require government policies that increase production, improve distribution, and reduce supply constraints. What does this mean for investors? Because the decision was widely anticipated, a major immediate reaction across financial markets is unlikely. Fixed income yields should remain relatively attractive in the near term, while equities will be more influenced by company earnings, dividends, and underlying business performance. The possibility of future rate cuts has not disappeared. If the harvest season improves the food supply, the exchange rate remains stable, and inflation continues to trend lower, the case for monetary policy easing could strengthen later in the year. However, the CBN will likely require several months of convincing data before reducing rates. The July decision was therefore not a sign that the CBN is comfortable with inflation. It is a strategic pause, protecting recent stability while monitoring food prices, the exchange rate, and the global energy risks. Thank you for listening. Please join us same time next week for another interesting and insightful session. For questions, comments, or feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed and have a great week. Bye.